Hey everybody, well I have substantially upgraded my recording studio. Instead of being in the filthy Home Depot parking lot, I am in the luxurious Stanford Shopping Center parking lot, uh, home of some of the finest luxury retailers that are closed in America, including the Microsoft store, which won't even exist anymore apparently. So anyway, if you hear heavy breathing, it is not the excited respiration of any of my chart fans. It's a subset of my dogs. So, anyway, that is my high class professional introduction to this. And I don't know if I've ever mentioned this anecdote or if you've read it, but when Apple was forming, Steve Wozniak got to be employee number one, which Jobs wasn't too thrilled with. So, after some thought, he asked Mike Markula if he could be employee number zero. So that's kind of the basis of this video because I am doing all public videos this weekend on my portfolio. Usually I kind of split them between my beloved Gold and Diamond members and everybody else. But for want of content, I'm going to pad out this weekend with these videos over time and just let everybody see them. And then I thought I'd kick it off with a brief thumb through of the index markets just to get things cooking. But I would say, as I always do, those of you who aren't members should really seriously consider it. Just click the memberships link in the upper right corner. You can see the breathtaking number of benefits you get from the various levels of service, besides which is my undying gratitude for your support of this little enterprise. And one of my dogs just jumped into the front seat with me, so I think that means it's ready to get going with indexes. All right. Well, this was an important week because a couple of things happened simultaneously. One, tech stocks reached their highest point in human history. And two, at the same time, core breakdowns took place in intermediate trend lines across the board. So let's just go through these in alphabetical order. Some I'll just blow right past, others I'll spend a few moments on. So here's the Dow Jones Composite. And the trend line you're going to see again and again and again is the March 23 anchor, where we have, with no apologies, cracked it and closed beneath it. And that's a good thing. The Comp Q, which, as my premium members know, about 80 minutes before the peak, I did a post saying, I think this is the top. And that's held so far. But in spite of all the strength, in spite of tech stocks being even more overpriced than they were in March 2000, what we have here is not a failure to communicate, but a failure to hold the trend line. So we have broken this one as well. And that is also a very good thing because we need round participation from all you guys to fail. Gold Bugs Index, God bless them, continues to strengthen. And I say Godspeed and good luck and go higher and yay. The Indu, we're still around 25,000, which, hand to God, is probably 15 to 20,000 points higher than it really should be. But what you gonna do? This is this crazy broadening pattern we've been in for a couple of years. And we had our fantastic island reversal pattern here. And then a continuous breakdown. So we close lower now than we have since late May. So but the lowest closed in about a month. And we have shaved off this ridiculous market about 2,500 points. All good. Until the government comes up with some other scheme to rob future taxpayers and benefit the 0.1%. Here's the NASDAQ 100. And this also peaked on Tuesday. And no, that's my mask. Give me that. Okay, one of my biggest dog is bored, and it's your fault. Anyway, So this was one of the holdouts, and finally on Friday, after the government dropped all bank regulations on Thursday in a desperate attempt to prop things up, it fell on Friday, and so we've cracked that trend line as well. S&P 100, weaker than the others. This gap here was the failure, and we've stayed persistently beneath the trend line. Now, one of the real holdouts, and by far the most important to me, is the Russell 2000. This is our Jesus pattern, the Ichthus pattern. And you need an electron microscope, but we did break the trend line. And that's a really good thing. And I certainly hope it continues to flail and collapse and plunge and all those good things. But it definitely was stubborn, and it finally failed. And we've got that amazing red center line at the top where we had peaked on this thing before retreating, after having risen 60% based on the criminal Jerome Powell. Semiconductor index, also sky high, and also God be praised, has failed its trend line. It just cracked it on Wednesday, rallied to the underbelly of it, and then reversed. S&P 500, zooming in here. So this is the long-term, well, not super long-term, but decade, about a dozen years channel, the one back to the bottom of the financial crisis. And we zoom in here, and as with the S&P 100, this cracked this quite plainly and has stayed beneath it persistently. Transports, kind of a sloppy pattern, not really worth dwelling on. Incorporated into this, of course, is the airlines, which are a disaster. The utilities, which I did a post on earlier in the week saying these look prone to selling, are still way below their own lifetime high, which I don't think we're going to see for years and years and years again, back on Feb 18. The VIX in the mid-30s still. It wasn't that long ago where a VIX at 20 would be breathtakingly exciting. These days, mid-30s is sort of drab. But, it had burned off, thanks to the criminal Jerome Powell, from 85 all the way down here. It bottomed on June 5th, down at 23.54. And it looks to be getting some life back in it. XAU, the gold sector, here again, getting some strength. Bullish gold, bearish equities, that's me. XBD broker-dealer index. This had gotten almost back to the gap, which is beautiful. This, of course, was the day that I think it was a JP Morgan body trade. That was brilliant. And then we just about recovered it, and now we're starting to fail. This one hasn't broken. This is just about the last man standing, or the last woman standing, or the last they standing. But there's the trend line that needs to be broken. Major market index, XMI. This has most assuredly failed. And then XOI, the oil index. We've got our major cyclical peaks here. And most recently, we've been breaking down beneath this island reversal. So all in all, a very good week. And it's good stuff. We're about to head into Q3 here. The balance of this year is going to be one of the most exciting and interesting and hazardous in American history. And we'll all be right here on the Slope of Hope to witness it. But not talk about politics until election day is over, right? Right. At least for me. So I will be back with the other 4 videos for all of you. And get a membership. You deserve it.